Decoding Student Loans, a guide to tackling higher education debt. Most students are unable to pay for college out of pocket and have to rely on student loans to finance their education. While student loans can be a great help in achieving your educational dreams, they can also be a significant source of stress when it comes to repayment. In this post, we'll break down student loans into simple terms and provide you with the tools and resources you need to tackle your educational debt. From understanding different types of student loans to creating a repayment plan that works for you, our guide will help you decode the world of student loans and take control of your financial future. Introduction: the rising cost of higher education and the impact of student loans. Introduction: the rising cost of higher education and the impact of student loans. Higher education has always been seen as a pathway to success, but in recent years, the rising costs associated with pursuing a degree have become a growing concern for students and their families. The dream of obtaining a college education often comes with a hefty price tag, and more students are finding themselves saddled with substantial debt upon graduation. It can also contribute to mental and emotional stress, affecting the overall well-being and quality of life for borrowers. In this guide, we aim to decode the complexities of student loans and provide practical advice and strategies for tackling higher education debt. We will explore various types of student loans, repayment options, loan forgiveness programs, and proactive steps that students can take to minimize their debt burden. By understanding the intricacies of student loans and developing a comprehensive plan, individuals can navigate the world of higher education financing with confidence and set themselves up for a brighter financial future. Whether you are a prospective student, a current student, or a recent graduate, this guide will serve as a valuable resource to help you make informed decisions and take control of your student loan journey. So, let's dive in and begin decoding the world of student loans, one step at a time. Understanding the different types of student loans. When it comes to financing higher education, understanding the different types of student loans is essential. Student loans can play a significant role in making education accessible, but they can also be a major source of debt if not approached wisely. So, let's break down the various types of student loans to help you navigate this complex landscape. Federal student loans. These loans are issued by the federal government and offer several advantages. They typically have lower interest rates compared to private loans and provide various repayment plans, including income-driven options. There are three main types of federal student loans: direct subsidized loans. These loans are based on financial need, and the government pays the interest while you are in school and during other specified periods. Direct unsubsidized loans. Unlike subsidized loans, these loans are not based on financial need, and you are responsible for all interest accrued. Direct plus loans. These loans are available to graduate students or parents of dependent undergraduate students. They require a credit check and have higher interest rates than subsidized and unsubsidized loans. Private student loans. These loans are offered by banks, credit unions, and other private lenders. They can be a viable option when federal loans don't fully cover your educational expenses. However, private loans typically have higher interest rates, and eligibility and interest rates are based on creditworthiness. State and institutional loans. Some states and educational institutions offer their own loan programs to help students cover educational costs. These loans may have varying terms and interest rates, so it's important to research and compare them to federal and private loan options. Understanding the different types of student loans is crucial for making informed decisions about borrowing for higher education. It's advisable to exhaust federal loan options before considering private loans, as federal loans often have more favorable terms and repayment options. Additionally, exploring scholarships, grants, and work-study programs can help reduce the need for loans altogether. By equipping yourself with knowledge about student loans, you can navigate the financial aspects of higher education more effectively and minimize the impact of debt in the long run. Exploring federal student loans, eligibility, interest rates, and repayment options. When it comes to financing higher education, federal student loans often play a crucial role for many students. Understanding the intricacies of federal student loans is an essential step in tackling higher education debt. First and foremost, eligibility requirements for federal student loans are generally more lenient compared to private loans. To be eligible, students must be U.S. citizens or eligible non-citizens, enrolled at least half-time in an eligible educational institution, and maintain satisfactory academic progress. These loans are also available to graduate students and parents who want to support their child's education. Interest rates on federal student loans are typically lower than those offered by private lenders. The rates are set annually and are determined by the type of loan, such as direct subsidized loans, direct unsubsidized loans, or direct plus loans. The interest rates for federal loans are fixed, meaning they remain the same throughout the life of the loan. providing borrowers with stability and predictability. Repayment options for federal student loans are designed to be flexible and accommodate various financial situations. The standard repayment plan requires borrowers to make fixed monthly payments over a period of time, usually 10 years. However, there are alternative plans available, such as income-driven repayment plans, which adjust the monthly payments based on the borrower's income and family size. These plans can be a great option for those who may have lower incomes after graduation or are experiencing financial difficulties. Additionally, federal student loans offer various forgiveness and loan discharge programs. These programs provide relief for borrowers who work in public service, teaching, or other qualifying professions. They can help reduce or eliminate the remaining loan balance after a certain number of qualifying payments. Exploring federal student loans is a crucial step in navigating the world of higher education debt. Understanding the eligibility requirements, interest rates, and repayment options can empower students to make informed decisions and effectively manage their student loans. Thank you so much for joining us today. We hope you found this video valuable and informative. If you enjoyed this content, please give it a thumbs up and consider subscribing to our channel for more insightful videos like this.